on them.
We talk about just this, even if we see the war end today, that inflation might stay here for a little bit longer, given just the damage to energy infrastructure, how long it takes for energy flows to resume the Strait of Hormuz.
And also the disruption to the supply chain.
Yes. Markets are shifting their forecasts, or at least what central banks can do. We've seen some central banks in this part of the world already raise rates. Traders are pricing in a Fed rate hike by year end. Can Hong Kong withstand a 10-rate cycle?
Our dollar is pegged to the US dollar, so in a way we are affected by the interest rate trend. Our assessment for the rest of this year is that interest rate in the US, given the inflation, very difficult to come down. But at the same time, although the trend is the same, but it's not on a lockstep. When you look at a few years ago when the interest rate in the US went up or came down, largely the trend is the same, but we judge the impact on Hong Kong based on our liquidity positions. Say, for example, if the capital inflow remains very strong, the interbank liquidity is high, so there is no reason for us to push up the interest rate. So remain vigilant, but at the moment, I think wouldn't be any very significant changes. Yeah.
I have to get your take on the regulatory environment right now. I think last time we spoke, Hong Kong in some ways is a victim of its own success amidst this IPO boom. We were talking about the priority is quality listings. The last couple of weeks, we've seen what looks to be a pretty unprecedented crackdown from China on cross-border trading. What we heard is that it started in the brokerages, but there's lingering concerns in the market now that this could spread to financial services here in Hong Kong, whether it's wealth, IPOs, property. What are you hearing on the ground?
Number one, the central authorities are very supportive of Hong Kong. They want Hong Kong to succeed as an international financial center, so no doubt about it. This is one. Number two, the recent crackdown are mainly on those people who move their funds to Hong Kong for different investments, not through legitimate means. So if the capital inflow are in a proper channel, they still are encouraged. We are still working with the central authority, for example, on further improving